Hey everyone, welcome back. Let's discuss how market behaved today. We were stuck in a very tight trading range for most part of the day, and towards the end, we got a brief bull breakout, and that too reversed, and we closed near the open, creating a doji bar on the daily time frame. So going into the day, what was I expecting? Let's start with the daily time frame. If you look here, we had a strong rally here since 24th of July, and after this strong rally, we have been pulling back in an endless pullback tight bear channel here. If you look at this entire channel here, if you look at this very carefully, this is a 9 bar bear micro channel. What does a bear micro channel mean? It means that the high of every bar is below the high of the prior bar. If you see this high, the high of this bar is below the high of this bar. The high of this bar is below the high of this bar. The high of this bar is below the high of this bar. Like that, we have been stuck in a 8 to 9 bar bear micro channel here. So whenever there is a bear micro channel, the first reversal up usually fails. So I was expecting that if we open flat and if we go below the previous day high, we will find the sellers there. So I was not expecting a strong bull trend day. Usually, whenever the market has a strong rally, and instead of creating some kind of major trend reversal pattern, if we do get an endless pullback, there is a 50-50 chance that we could get a sudden surprise bear breakout and follow through and we fall for a measure move down. So it was possible had we opened a big gap down or had we started getting good sell off below the previous day low as well as below the low of 12th of August. If we did get a strong follow through below all of these bars here, we could have gotten a sharp bear breakout and a follow through. So going into the day, I was not expecting a bull trend day because of the 9 bar bear micro channel. It was possible that if we do sell off sharply below the previous low and this swing low, 12th of August, we could get a big bear breakout here and a possible measure move down based on the height of this bear channel in the coming days. Most likely, what was I expecting? If you look at all the bars here, there's a lot of trading range price action here. The bears did attempt to break below this 4th August low, but look at how the follow through looks like. Look at how the bars here are below the low of this prior low. There's clearly no sign of urgency. It's not like bears are, oh my gosh, we need to sell this. Let's sell at the market or anything like that. It is not like that. You can see the clear hesitation here. The bulls are coming in around the EMA. We are closing the gap with this prior breakout point. So this creates more of a trading range price action. Because of this trading range price action, I was expecting today to also remain in a trading range, 60% chance that we will find buyers below the previous day low and sellers above the previous day high. About 20 to 30% chance we could have gotten a strong bear breakout. Only 10% chance we could have gotten a strong bull trend here. Also on the 5 minute chart, if you see, since today was the last day of the week, even the weekly support and resistances are magnets. So I've marked the open of the week here. I've marked the previous day high as well as the previous day low. And if you see the entire week since Monday onwards, we have sold off very sharply. And since past 2 days, we have been stuck in a trading range here. So I was expecting the market, if we open flat and if we do not get a sharp sell off below the previous day low and the swing low, will continue to remain in this trading range for the rest of the day. And that is what actually took place. We are stuck in a triangle here. Whenever there is a triangle, it is a breakout mode situation. 50% chance we could get an upside breakout, 50% chance we could get a downside breakout, and 50% chance the first breakout up or down will fail. So let's see how the market behaved here. Let's discuss bar by bar. Bar one. So bar one, we opened flat, and this was a sell-off to the previous day low, and it was about a 50 points big bear bar. However, they were probably biased below the previous day low because of all the trading range price action that has been taking place since past few days. So you have to expect that the breakouts will fail, and the market will continue to keep doing the same thing, which it has been doing since past 2-3 days here. However, if the bears get a strong follow through here on bar two, it was possible that the market would sell off all the way down to this swing low and then before it finds buyers. However, you have to ask a question to yourself. Why did the bears not get a close all the way down below the previous day low? Why there is a big tail at the bottom of this bar? There's clearly some sort of hesitation here. Wait for more information, okay? Bar 2, clearly bad follow through for the bears. It's a low one short, a breakout pullback short for the bears. The bears are the bears see that there is a gap here with the 69 low. However, why did we get a bull body here? So that is not a sign of strong bear trend. This is not how usually strong bear trends start. This we are at support, previous low. This is a possible bear trap, and we have a low one short, that to a bull body. What do you think will be more likely below the low of this bar? Will there be more buyers below the low of this bar or sellers? There will more likely be buyers below the low of this bar, buyers around the previous low. It's a low one shot after a possible sell climax at support. That is usually a losing strategy. Bears need to do more. Bears need a strong follow through, a strong sell off below the previous low if they want a strong bear trend day here. And this is not behaving like a bear trend day in the first two bars itself. Bar 3, breakout below the previous low, but there are more likely buyers below the low of this bar. I expect the gap to close with a bar 1 low as well as a bar 2 low. But if the gap stays open, if it goes to go do get a strong follow through here, we could get a possible bear trend from open and a major swing down. And look at how the follow through looks like. Clearly disappointing for the bears. Also, the gap with the 69 low close. If you see, the high of bar 4 close the gap with the 69 low here. So this is clearly disappointing follow through for the bears. And for the bulls, we have an outside up, a failed breakout below the previous day low, and a possible lower low micro double bottom, a lower low double bottom with the previous day low. However, this is an outside up bar, and there is a big tail at the top of the bar. Usually I take outside up signals only when the prior bar is a good buy signal here. And prior bar 3 isn't a good buy signal here. So not a strong reversal up here. The best the bulls will get here is a minor reversal up, a possible trading range, and a later breakout test of bar 3 high. This is not a strong sell off as well as strong price action for the bulls too. Bar 5, bulls are getting bull bars, but there are prominent tails above. First of all, there is an absence of good buy signal bar. Then there is weak follow through bars with tails as well. This is not a sign of strong bull trend day. The bears will attempt a low to short near EMA. If bar 6 closes near its low, it will be a reasonable swing short, low to short for a possible swing down. Look at how bar 6 is. This is a low to short, but there is a tail below. As a possible breakout test of bar 3 high. This is disappointing follow through for the bears after bar 1 and after bar 3. So disappointing follow through for the bears after bar 1 and after bar 3. And this is disappointing sell signal bar as well for the bears. This is bar 6. So on 15-minute time frame, if you see, this is bar 2 on the 15-minute time frame. And bar 2 has made a clear lower low double bottom with this swing low, a possible major trend reversal pattern. However, even this buy signal has a big tail at the top of this bar. So this is not a high probability, a good swing buy. There are more likely more sideways here. So no strong buy signal for the bulls, no strong sell off for the bears, as well as disappointing follow through. More trading range price action is expected. Another bull bar, but the bulls are failing to get strong bull bars closing near the highs, bars closing above the bar 1 high above the EMA. Bar 8, another reversal down. So this is clearly a limit order market. Even the bears who sold above the bar 3 high were able to make money here. So even though bar 1 was strong, a 50 points big bear bar, and we got a sell off all the way down to the previous low, look at how the follow through looks like for the bears. Not strong enough. Clearly trading range price action. This is not how breakouts typically behave. A breakout below a triangle. We have a double bottom here. We are clearly in a trading range here and we are low. So I'm looking to buy, but I need a strong buy signal bar or sign of some bull strength here, or either I will buy after a strong reversal up here. Bar 9 is a reasonable swing long for a failed low to bear flag here. We have a low to bear flag, or you can also call it a wedge with bar 2 and bar 5. However, big buy signal closed below EMA as well as a lot of overlap in the past 4-5 bars here. So not a high probability buy above. There are more likely sellers above the high of this bar. Whenever you get a big buy signal, It means there is big risk. And also the probability is low because there's a lot of overlap between all of these bars. Plus a close below EMA. So there are more likely sellers above the high of this bar. The bulls have a decent entry bar here, but they need to do more. Good follow through for the bulls, and we have three strong bull bars here. But why are we not getting strong bull bars? Why is there a low overlap? Why did the gap with bar 6 high close here? Not a strong sign by the bulls yet. And for the bears here, we have a wedge bear flag, a possible lower high double top with bar 1 high, and a reasonable 2 bar reversal swing shot here. Why is it swing shot and why not a high probability shot here? Because it is being followed after three bear bars. High probability sell after you see a good entry bar, good follow throughs, or to wait for a second entry shot. You see, there's a good entry bar for the bears here. Good follow through bar as well on bar 14 for the bears. This is a double top for the double top opening reversal shot here for the bears. And they have three decent sell off bars with sell off here. Odds are there will be sellers above the high of bar 14 and we will get a second leg down. Probably a test of bar 9 low as well as a test of bar 4 low here. And look at what we got here. Sharp sell off here. Five consecutive bear bars, most of them closing near the low, as well as this bar, big bear bar, breakout below the low of bar 4. The bears have a double top here and they would want a possible breakout below the neckline of this double top and a measure move down. But look at bar 16 here. Why did bar 16 did not close above below the low of bar 4? Why do we have such a big tail at the bottom of this bar? This is clear signs of hesitation. Bears need a strong follow through bar here, or else the bulls will, or else this is just a bear leg in a trading range. Bar 17, lower double bottom with bar 14, strong buy signal bar, a possible lower double bottom after a sell climax on open, second reversal up below the previous day low, reasonable swing long above bar 17. However, since it is coming after 5 bear bars here, high probability to wait for a second entry buy or to wait to buy after a strong reversal up here. Decent entry bar for the bears, for the bulls, sorry. Bar 19, three strong bull bars here. Odds are there will be buys below the low of this bar and a reversal up. Second leg up is likely. The bears had a strong sell off here, but the bulls have undone most of the damage that the bears had done here. So odds are there will be buys below the low of this bar. Buyers around the 50% pullback of this entire rally. Buyers below the low of bar 16 as well. We are right near the bottom of a trading range, so you have to be willing to buy low as well as scaling lower. So you have to trade small. This turned out to be a big bear surprise. I was expecting buys below the low of bar 20 as well as around 50% pullback, but this sell-off is too strong than what bulls would have imagined. This increases the chances that we will get a second leg down because it's a bear surprise. We reversed it twice from the previous low and we are failing to reverse strongly up. If the bears get a strong follow through here, we could get a swing down. It is possible that the bears had a double top, a breakout below, a possible pullback, breakout pullback, double top pullback, and a reversal down for a possible measure move all the way down to 24,244, which takes us below the swing low. Again, bad follow through for the bears here. Bears have attempted multiple times to break below the previous low. They had a strong bar here, a good bar here, as well as a good bar 16, as well as decent, a strong enough bear surprise on bar 21, and they are failing to get good follow throughs here. This is clear signs that today this is a trading range open. Good buy signal again for the bulls here. The bulls had a strong sell off here and a good buy signal here, but because of the 5 bear bars, they wanted a second entry long. And this is their second entry long. So reasonable swing long above bar 22. II pattern here, reasonable to buy above bar 24 as well. Higher probability, second entry buy for the bulls. Good entry buy here. And again a bad follow through. The bulls are failing to break out strongly above EMA. You see, bar 1, we reversed from EMA. Year 2, after a couple of bull bars closing above EMA, we reversed again down. Year 2, we reversed down. Bulls are again failing to reverse to strongly break out above EMA. And for the bears, they have a low to short here, but it's a doji after a good, decent bar 25 and decent buy signal bars here. More likely, more sideways. Bulls are disappointed, bears are disappointed. However, I expect a little more up here. The bears, after the bear surprise, are getting their second leg down here. And another bull bar. Three good looking bull bars here. One, two, three. Even the reversal here was strong. And this is a fourth reversal from the previous yellow. The bears have continuously tried to break below the previous yellow. Whenever the market tries to break in one direction, twice or thrice, and it fails, it usually goes in the opposite direction. And here the market has tried to break below the previous low almost four times now. So odds are high that if the bulls are able to get a strong reversal up here, we could get a major swing up. Also, if you see, in past 3 days, bar 1 remained as a high of the day. Here bar 1 remained as a high of the day. Even here bar 1 remained as a high of the day. So odds are high that today the bar 1 will not remain as a high of the day. So if we do reverse up from here, it is possible we could test all the way up to the bar 1 high. Decent follow through for the bulls after a decent buy signal bar. The bulls again are failing to break out strongly above EMA. Again, we are reversing somewhere around EMA. For the bears, this is a wedge bear flag, but a weak sell signal bar after three bull bars here. Odds are there will be buyers below, and and the bulls will attempt to break out above the EMA here. And that is what we got. A breakout above the EMA, a breakout above this double top, a breakout above this wedge bear flag, a breakout above all of this tight trading range behavior here. Bulls attempted to reverse four times from the previous low, and now they have a couple of bull bars here. Odds are high we will get a second leg up now. However, the breakout is not particularly strong, so this is not going to get a major swing up. Probably buys below, a small brief second leg up before we go more sideways, which is what we got here. Four consecutive bull bars here. Odds were high that there will be buys below the low of this bar, and we could test all the way up to the bar one high. Four consecutive bear bars. Bulls should not have allowed this. The Bears have also managed to close the gap with bar 31 higher. So that is not a sign of strength for the Bulls. This is clearly disappointment. The Bulls will attempt to get a second leg up here, but most of the disappointed Bulls will look to exit, which is what happened here. The Bulls did get the second leg up, and now the Bears have a second entry shot with bar 46. Reasonable to sell below the low of this bar for a possible break below. See, if you see here, the Bulls have been attempting to get high lows, high low here, high low here, high low here, high low here, high low here. However, the Bulls should not have allowed to close this gap. Since the gap closed, there is clearly disappointment amongst the Bulls, and they will give up. So I doubt this high low pattern will continue to hold. So reasonable to sell below bar 46 for test of bar 42 low, which is what we got here. We tested the bar 42 low. Now the Bears have another breakout here below the bar 42 low. Bears would want to break out below this double top neckline and a possible measure move down again back down to the previous low. However, look at all the past few bars here. Every time the Bears have attempted a breakout, how has the follow through been like? Breakout below the previous low, look at the follow through here. Breakout below the day low, look at how the follow through has been. Bear surprise, again another breakout below the previous low, look at how the follow through has been. So every time the Bears have failed. So what do you think will happen on bar 53 as well? Most likely the Bears will fail, which is what we got here. Strong reversal up and outside up high two pattern here. The Bears failed here once and the Bears are failing here twice. Whenever the market is reversing up twice, odds are high it will test the high of this bar. As well as since bar 1 high is a magnet, we might go all the way up there before we find sellers. Strong reversal up, reasonable to buy high above this, but a swing buy only, low probability because it's a big bar. So results and big risk. You're buying right at the top of a trading range. So low probability swing buy only. And look at what we got here. I was expecting sellers around the previous day high, around the day high, bar 1 high. However, strong high to buy signal here, strong follow through, and then we got a strong breakout as well as a decent follow through here. Reasonable to buy the close of this bar. However, this has occurred around 140. Most of the time during the day, the market has remained in a tight trading range. So this is unlikely to reverse into a strong bull trend. If the market wanted to reverse into a strong bull trend, it wouldn't have remained sideways for this many bars for this much time of the day. So it is unlikely to reverse into a strong bull trend. The best the bulls will get here is a small brief second leg up, and the market will then enter a possible trading range here, creating a bull trending trading range there. Also, if you see, the open of the day is right in the middle of the day's range. So it is possible that if we do reverse down, we'll probably close somewhere near the open, creating a doji bar on the daily time frame. However, this is clearly always in long. We have four consecutive bull bars. This looks strong. There are odds are bias below, and we will get a possible second leg up for some kind of a measure move. What measure move can we get here? Probably this. Since we are going higher, I will look for other measure moves here. So Bulba Doji. This is strong enough rally for the bulls that the odds are they will be biased below the low of bar 58. However, we have had a lot of trading range price action here, and odds are this is not going to be a strong bull trend day. So higher probability is to buy a pullback somewhere closer to the EMA, or maybe look to buy a high too instead of buying below the low of bar 58. This is reasonable to buy, but better to buy a deeper pullback here because of all the trading range price action that has taken place today. Also, we are somewhere around the measure move here. So wait to see how the bar 59 and 50 and 60 and the other follow through bars looks like. And if the bulls are able to generate a good strong high one buy signal or a high to buy signal, they they could buy for a possible second leg up here. However, four consecutive bear bars, three of them closing near the low. This is not a sign of strong trend up. This is clearly a sign that the bulls are failing. This is a sign that we will possibly enter some kind of trading range soon. Three strong bull bars, it is okay to sell the close of bar 61, betting that we will close the gap with the bar 1 high, and we will possibly close around the bar 1, creating a doji bar on the daily time frame. We continue to sell off. Test of the day is open. This is a sharp reversal down. We are around a 50% pullback. There are bulls who bought the close of this bar, the bulls who bought below the low of this bar, and they will be disappointed by how deep we have pulled back here. They will be disappointed that the gap closed. So they will be looking to exit on any kind of a pullback here. This is a pullback. Do you think the bulls will buy above the high of bar 68, or do you think they will, the ones who did buy around all of these bars here, will look to exit? They will probably look to exit here, which is what happened. Bar 69. The bulls who bought below the low of this bar scaled in lower, exited somewhere around the 50% pullback. If you see, we came within a tick of the 50% pullback, and then bar 69 was a reasonable sell for the possible test of open and close somewhere there. And that is what took place. So a lot of trading is price action today. All you had to do is buy low, sell high, and scalp. Since the range was very tight, it's not easy for a lot of traders to, especially beginners, to be dealing with trading range price action like this. Difficult to get big swings up and big swings down when most of the days since past 7 to 8 days looks like that. So, what were the reasonable swing trades today? The first reasonable buy was below the a limit order buy below the low of previous low, betting that the breakout will fail and we will reverse up, which we did here. No decent buy signal here. Okay to short below the low of bar 12, lower high double top wedge were a flag at EMA. Okay to buy above bar 17, but swing buy only. We had a double top here, we had a double bottom here. Had the bears gotten a bear breakout, so this was clearly a breakout mode situation. Had the bears gotten a bear breakout here, we could have fallen for a measure move. This was similar to what took place on bar on 12th of August. If you see, we sold off, we rallied, we had a double top with bar 1. and then we had a double bottom here. However, if you see on bar 9 and 10, we did break out below this double bottom and we fell for about a measure move down here and entered trading range for the rest of the day. So bears wanted to get that. They wanted a breakout below this double bottom and a possible measure move down here. However, the reversal up was too strong that odds were there will be buyers below the low of bar 20 and around this zone. So, okay to sell below bar 12, okay to buy above this, buy above 24, 28, okay, sell below 32, but the channel up was too tight. And also we will break out above the moving average and reverse up above the previous low since the bears have failed multiple times to break out below. Okay to sell below bar 20, bar 46. Strong reversal up, buy above bar 53, but not a high probability thing to do, not the best looking buy because it's an outside up after a bad buy signal here. Odds were that we will break above the bar 1 high. So you could take that, but have to use a wider stop. Then the only reasonable stop order trade below around this zone was below bar 69. So what do I expect tomorrow now? A lot of trading range behavior here, trading range here, trading range here, trading range here. How do I predict what will happen next? The best, I would give you one advice. The best way to predict what will happen about the bars to the left, to the right is based on what you see on the bars to the left. What will happen here on the bars to the right is based on what will happen, what has already happened here on the bars to the left. So if we open flat, if we do not break out strongly above this previous day high or previous day low, if we break out above and find sellers, if we break out below and find buyers, odds are we will again repeat what we have been doing for the past 3 days here. On the daily time frame, we have an endless pullback here after a strong rally. Whenever you have an endless pullback, sometimes you get a sudden bear breakout and a follow through, and we fall for a measure move down here, which is what I'm expecting in the days ahead. But for that, the bears need to get a strong sell off below the previous low or open a big gap down and get a strong sell off. If they do get that, we will possibly sell off all the way down to 23,700. For the bulls, we have about 9 to 10 bar bear micro channel here. Odds are there will be sellers above the previous day high, and it is unlikely we will get any kind of a strong bull trend day. So on Monday, 60% chance we are again going to repeat what we have done here. Probably buyers below the previous low and sellers around the previous day high. If we do open gap down, if we do open below the previous low or below the swing low and get a strong sell off here, we could get a strong bear trend day, creating a bear breakout of this endless pullback. And then we will fall for a measure down in the coming days. What if we open gap up? We'll probably find sellers. There are a lot of trading range price action here. So a lot of resistances above. Odds are we will not get a strong bull trend here. Also, we are around the 14th of August now, and we opened here. This was the 3rd of August, yeah. So yeah, look at how the bars on the how the monthly bar has looked like for almost half a month. How the price action has looked like for almost half a month. We have had a lot of trading range price action. We are around the middle of the month. So if the bears want to get a bear breakout here, they have to do it either on a Monday or a Tuesday. If they don't, we will probably remain in this trading range for the rest of the month. Probably a bear trading range here, trading range month where we have a big trading range here and then another trading range here for the rest of the month until 31st of August. Or we will reverse up and just create a big trading range like that. If the bears want to get a strong sell off here, they have to do it either on a Monday or Tuesday with a big gap down. So that's it. Thanks for watching. Best of luck for Monday.